God bless you, everyone, and greetings from the Boston Institute for Global Business Leaders and Worldwide Entrepreneurs. My name is Ambassador Professor David K. Ewan from the United States and also mission volunteer at the United Nations. I'm so happy to hear from many of you here in the United States. I get a lot of great questions. People here in the United States have questions related to the impact of the current and future pandemics and other potential imminent threats like a war in the Asian Pacific, for example, that could interrupt manufacturing and global trade routes in the region. I'm happy to answer those questions. Well, this video is with an American audience, and it is designed to create a foundational understanding of how NGOs, or non-government organizations, flow domestically financially and the impact to and from global economic conditions. It's a good topic of question to ask during the uncertain times that we live in. The questions relate to the future of the economy. Any economic interruption can be generated by various issues. For example, world health issues such as the COVID-19 pandemic. Number two, the fighting force of special interest groups with politically or religiously motivated agendas. Number three, governmental issues, such as the sanctions and tariffs. Number four, the currency exchange values between competing nations. And number four, the workforce population trends that we've been seeing. These have dire impacts on global economic flow. This flow is the even balance of trade, both physically and financially among nations. The first impact is a fractured supply chain of goods and services. That's the first impact, a fractured supply chain of goods and services. The next topic to think about is the result of the fractured supply chain of goods and services. You see, this shifts backwards the effects of the economies of scale. The economies of scale by reducing the profitability of output. See, the key factor here is the economies of scale. In turn, this redefines the equation of supply and demand. This is what generates inflation rates at the global level. Inflation reduces purchasing power, thereby reducing a company's bottom line. For example, their revenue stream. When that happens, more layoffs and other staff reduction measures take place, which in turn further reduces the purchasing power of a nation. With less purchasing causing reduced corporate output, the GDP, or gross domestic product, shrinks. We define the shrinkage of 2 fiscal quarters in a row as a recession. A recession is a downtrend in the economy that people see as lower household income spending occurs. A more severe situation is caused by the effects of a depression that includes widespread unemployment and major pauses in economic activity. A recession is a downtrend in the economy that people see as a lower household income occurs and lower spending. A more severe situation is caused by the effects of a depression that includes widespread unemployment and major pauses of economic activity. The way Americans can survive huge economic downturns is to prepare in advance, not during, but in advance of the downturn. Number one, save some sort of emergency fund. Number two, establish a budget to prepare for the downturn and also pay down your debts. Number three, downsize to a more frugal lifestyle. Live within your means. Number four, diversify your income. So if you lose one source of income, you'll have the other one as a backup. And number five, diversify your investments. Whatever people do, it is best to follow the advice of those who are experts and know what is going on. Most importantly, The option of doing nothing is not an option at all. There are a lot of economic indicators that an NGO looks at. Remember, an NGO is a non-government organization. The economic indicators are internally generated and are documents produced by a designated CPA or certified public accountant. These documents are under the stewardship of the corporation. Usually it's the official corporate treasurer who has the official stewardship of these documents. Let's look at what they are. Number one, the balance sheet showing the assets and liabilities and the debt to equity ratio. Number two, the cash flow statement that shows the revenue streams. Number three, the consolidated income statement that demonstrates the liquidity of an organization. Number four, the profit and loss statement that show the economic muscle of the organization. All of these have specific routine schedules. They're monthly, they're quarterly, and they're annually. Now let's look at the quarterly. At each end of quarter, there are accounting documents produced. The end of month, the EOM as we call it, the end of month, and the EOQ, which is the end of quarter, these are two sets of accounting documents generated. So at the end of the quarter, there's the end of quarter statements, and then there's the end of month statements. And of course, at the end of year, there's the end of month, end of quarter, and end of year. The accounting records of corporations show the nation the pulse of the economic downturn or the economic recovery. This information is more available for publicly traded companies in the stock market because their reporting is made public to shareholders and investors. So that's how we get an idea of the state we are in. There's more details such as tracking information from the reporting from the following. And they are, number one, the International Monetary Fund. Number two, the Economic Forum. Number three, the World Bank. Number four, the World Health Organization. And number five, the United Nations. And of course, there are others. Stay up to date with the Boston Institute. My name is David Ewan. I'm the Ambassador Professor at the Boston Institute and also the TOCA Enterprise. It's nice to have you with me. Stay tuned for more.